Hi guys, welcome to the free training. This is Andrew from Learn How to Trade Online, and over the next 6 videos I'm going to go through and show you how to double your winners. I'm going to show you how to skyrocket your profits. I'm also going to show you how to drastically simplify your trading. Now, with regards to your trading right now, whether you're struggling to find consistency, whether you're kind of making a bit of money, losing a little bit of money, or just like not confident in what you're doing, this is suitable for you. Let me just show you what we're trying to accomplish throughout this training. Okay, so let's just go through here. Step 1, I want to drastically simplify your trading because so many amateurs massively overcomplicate it. Trading is very simple in theory. Price can go up, price can go down, and price can go sideways. But yet, as human beings, and as a lot of amateurs turn around and make such a simple concept incredibly difficult. Indicators all over the charts, jumping from trading system to trading system. The more complex your approach, the more likely you are to lose money. The simpler your approach, the more likely you are to make money. Okay, now step 2 here. Identify more high quality trade setups. So I'm going to go through and show you 1 out of the 8 price action patterns that I use on a daily basis to pull profits from the markets. The third thing I'm going to show you is how to turn high quality trade setups into money. Because it's one thing being able to identify a trade setup, it's another thing turning it into money that goes into your back pocket. And the fourth thing I'm going to show you, which is perhaps the most important, is how to do this consistently and predictably. At the end of the day, you don't want to just make money on one trade. You need to make sure that you know how to do it in a repeating fashion, again and again and again, day in and day out. Now, I want to make sure that you know that this training is right for you. So you can see here on the screen in front of you, there's a scale from 1 to 10. Now look at it, read it, and decide where your trading is right now. Are you brand new? In which case, number 1. Are you currently live trading but not really making any money, just watching your account go in the wrong direction? You're probably a 3 or a 4. If you're making a little bit, losing a little bit, you're probably somewhere between a 4 and a 6. But if you're a 7 and above, this is not for you. If you're already consistently profitable, if you're already making good money, this is going to be beneath your level. Okay, so I want to make sure that this is suitable for the right people. So if you're a 1 through 6, you're in the right place. If you're a 7 or higher, turn off now. All right, I can't be any plainer than that. So if you've just started live trading, or you're inconsistent, or you're doing a few things right but a few things wrong, this is where you want to be. Now, there is a trading success formula, and it is, first of all, you must have a proven system. You cannot guess and gamble your way through this. Guessers and gamblers lose money in financial markets. Okay, you need a proven system that's reliable, that's repeatable, that you can use again and again. Now, along with that proven system, you need risk management. Okay, if you could give 100 people a proven trading system, but if they haven't got risk management, a lot of them would lose money. So you must have the risk management element plus the proven system as well. And on top of that, you need the discipline to actually follow the rules and apply risk management. So it's a 3-step process there. You must have a proven system, you must be able to manage risk, and you must have the discipline to follow the rules. Now, if you're going to dramatically simplify your trading, you need to get rid of all the rubbish that you've currently got on your screen. Whether it's MACDs, RSIs, Ishimoku, harmonics, supply and demand levels, that. If you've got different chart patterns drawn in, support and resistance, get rid of the lot. You don't need any of that stuff to make money. The cleaner your chart, the more money you will make. The more things that you have on the chart, the less money you will make. I can't be any clearer than that. Now, if you're going to dramatically simplify your trading and clear everything off, then you're left with one very important thing, which is the price. The price is the most important information on the chart, full stop. It's the only thing that matters because it's the only thing you can make any money out of. All the trend lines that you've drawn in are useless. Get rid of them. All the support and resistance levels you've been told you need to use, get rid of them. It's crap. It's never going to work. All of the chart patterns, the symmetrical triangles, the ascending triangles, all of the harmonic patterns you spent ages learning, get rid of it all. You need to be focusing on the price, and only the price. Now, the price is so important because it's the only thing you can make any money out of. And on top of that, I'm going to go through now and give you one of the 8 price action patterns that I personally use. So this is called a ringed low. And ringed lows are only used in an upward trend. So if you use this in a downward trend, you'll lose. Okay, you have to use ringed lows in an upward trend. Now, it's a buy signal because in an upward trend, we want to be a buyer. And the rules are that price must make a lower high and a lower low. So let's look at that now. Well, I'm hoping at this point that you're familiar with what candlesticks look like. If you're not, then this may be a tiny bit above where you're at right now, but I'll go through in simple terms so that you can understand. So these are candlesticks as a way of viewing the price. And the blue candlesticks mean price has gone up, and the red candlesticks means that price has gone down. Now, we're looking for a lower high and a lower low. So if we start from here, we can see we have ourselves a lower high and a lower low. That is a potential ringed low setup. And we're like 5-6 minutes into this video and you're already learning a price action pattern. Okay, so we're really cutting into the important stuff here. Now, just above the top of this candle is where you place your entry level. And if the next bar does not go up, then you wouldn't get triggered into the trade. So you've placed your entry level, you'd of course have a stop loss on there as well, and unfortunately in this case you don't get triggered into the trade, you haven't made anything, you haven't lost anything because you never got filled on the position. Okay, now looking at the 2 red candles now, we can see lower high, lower low. So that's the very bottom of the candle, that's the very bottom of the next one, they've got lower, hence lower low. That's the very top of the candlestick. Again, the very top, lower, high. So we have ourselves a potential ringed low there as well. You'd be entering just above the high there. And you can see that the next candle moves up, you get triggered into the trade. Now, of course, again, you'd have a stop loss in place. And from there, you're just happily making money. Now, that's a lovely, pretty picture, okay? But this works very, very well. I use ringed lows on a daily basis. All right, so out of 8 patterns that I use, it's not the best, it's not the worst, but it's a solid mid-table, reliable price action pattern. And you won't see it in all the candlestick books. It's something that's been around for a very long time, but almost forgotten about. Because when candlesticks came about, everyone started to get into shooting stars and hammers and Marubozus and all the weird different names they have. I've coded them all and none of them work. It's the simple stuff that works the best. And the reason why this works is because if you've got yourself an upward trend, this is a dip in an upward trend. It's value in trend. It's a good place to buy because it's cheaper. And these ringed lows give us the shift in momentum. Now, this is a very simple and effective way of trading. So on this chart here, you can see it starts at the bottom left. You can see it goes up towards the top right. This is an upward trend. And the arrows that I've drawn here show you the ringed lows that have actually triggered on this chart. So we can see here straight away, lower high, lower low, entry level. You triggered into the trade, you're making money. The next one, lower high, lower low, entry level, you triggered into the trade. First day, you're hating me, go, Andrew, I'm losing money, this isn't cool. But the next day, things shoot up and you're making money. So all of a sudden, I've gone from being in your bad books to suddenly being in your good books again. Several candles later, lower high, lower low, and then the one that actually gets triggered is this one here. You get triggered into the trade. Once again, you're not happy with me after the first day because you're currently losing money, and it jumps up in the right direction, and suddenly I'm back in your good books. And just over here as well, lower high, lower low. This was an easy one. You get triggered into the trade. This moved like 400 pips straight up. So that was a fantastic trade. Now, you can see how simple and effective this approach is. You can see how clean the charts are. That's what my charts look like. Okay, you do not want to overcomplicate it. The more things you add to your chart, the more complicated it is, the more likely you are to lose money. The less you have on the chart, the more you're going to make. And looking through this chart through here, we can see lower high, lower low, getting into the trade, you're making some money, then you wet yourself. That is the technical term, by the way. And then you get another trade set up here. Both of those jump to the upside, make you some money. Another one makes you some money. Another one. You get triggered into the trade. You'd be hating me an awful lot this day because it's going against you to begin with. Then 2 days later, when it's up there somewhere, I think you're quite happy with the result. Lower high, lower low, same thing again. Entry level, off it shoots in the right direction. And there's no way you're going to exit at the very top there, but you'll have made some money. The only losing trade realistically on that chart is this one here. Okay, because if you entered into the market at this point, you got triggered into the trade here, starts going up, falls down again, and that's there's no very likely about it. That's a losing trade. There's no way that you'd have actually thought to get out here. You'd have thought it was going to go further. That's a loser. That's absolutely fine. We're going to take losing trades. And when you take the losing trade, you're okay with that because you know the next winner is going to get you further ahead again. Okay, so it's about having good, high quality trade setups that make you a chunk of money each time you're right. Okay, so how do you identify more high quality trade setups? Well, time frame correlation. All right, so time frame correlation and the price action that we just looked at give you big winning trades. Okay, so we're talking trades that move a long way in the right direction. Okay, now I was showing you daily charts previously. This is a 1 minute chart. Okay, so it works on all the different time frames. I wouldn't go looking at 1 second charts, but other than that, 1 minute's as low as I go. And similarly, I wouldn't muck about on monthly charts unless you're running a pension fund. All right, but ultimately, you need to have big winning trades because that's the secret to turning high probability setups into money. You have to have big winning trades, and if your risk outweighs your reward, then you are going to struggle. Okay, I'll say it again. If your risk outweighs your reward, so you have bigger losses and smaller wins, you are going to struggle to make money. You need to have big winning trades. Now, there's a quote that I think is very valuable. It's that, in this industry, if you're good, you'll right 6 times out of 10. You're never going to be right 9 times out of 10. Okay, the reason for that, if you're right 9 times out of 10, you're either making back such small amounts or you just got incredibly lucky over those 10 trades. But long term, you're never going to get a 90% success rate. The reason being is you're in an environment, a marketplace with professionals. We've been doing this for decades. I've been trading for over 10, 11 years myself. So from that perspective, if you've been up against your 6 weeks of live trading and you think you're going to get a 90% success rate against someone like myself and other much larger institutional players, you're dreaming. Never going to happen. What have you figured out in 6 weeks that we haven't figured out in 10 years? All right. So now, here's the truly scary thing. 90% of uneducated amateur traders lose 90% of their money in 90 days. Scary, isn't it? It's because if you come into a marketplace of professionals, you have to respect us. Because our job is to make money. It's as simple as that. All right. If you come in thinking that you know best with your 3 or 4 weeks worth of trading a $300 account, you're in for a very rude awakening. All right. Now, if your risk is bigger than your reward, you will lose long term. You need to have bigger wins than losses. You're going to have wins, you're going to have losses, and when you get it right, you've got to make sure it pays. And when you lose, you've got to make sure it doesn't cost a lot. Okay, you've got to make sure it costs you as little as possible when you lose and make as much as possible when you're right. Now, look at some of the math behind this. Okay, now you'll see this table here on the left, the reward, the risk, and this is the percentage success rate that's required to break even. So forget making money, just break even. So let's put this into numbers we can really relate to. Let's say you're risking $100 on a trade to make back 10. Now you might have some short-term success with that, but you are going to lose overall, because if you risk $100 to make back $10, you have to win 91% of the time to stand still. Forget making money. Just to stand still, just to break even, you have to win 91% of the time. Okay. Now, obviously, you don't want to be doing that, because winning 91% of the time isn't possible long term up against other institutional players. Now, going further down through here, there's an awful lot of people that say, oh, I risk $100, I target $100. So there's a lot of people that go, okay, I risk $100 per trade, or I risk $50 a trade, whatever it is, I target the same amount. All right. The trouble with that is you actually need a slightly higher than 50% success rate to break even. Because when you're trading, you have extra fees, spreads, swaps, commissions. There's additional fees that you have on the winning trades, and obviously those costs are applied to the losing trades too. So I've already worked out you need to win 51.5% of the time at what you think is equal reward to risk in order to make any money. So, 1-to-1 reward to risk, risking $100 to make $100 at a 50% success rate actually loses a little bit of money. Okay, because of transaction charges and fees. Now, as we go further down through here, all right, obviously 20-to-1 reward to risk, that's like winning the lottery. The chances of it happening are very, very slim. So we don't want to try and trade that style, because it's very unlikely it's going to get there. The sweet spot is here. 2 and 3-to-1 reward to risk. All right. Now your success rate long term will fall somewhere between 40 to 60% when you know what you're doing. All right. So when you know what you're doing, your success rate will fall somewhere between 40 and 60%. Now, if we take the lower end of the spectrum, the 40%, if you have a 40% success rate, that 40 is obviously higher than the 33, and it's higher than the 25. So if you trade with winners twice the size of your losers, or if you trade 3-to-1s where your winners are 3 times the size of your losers, you will make money. You will obviously have losing trades, but you will make money overall. Okay, because we've kind of combined these together. Roughly speaking, a 30% success rate is the break-even level at 2 or 3-to-1. If you're achieving a 40% success rate, you're ahead. Now, you also must understand and must know your own numbers. You need to know your trading metrics. Otherwise, you're never going to know what you need to work on. So the first thing that I get my students to do is I need to find out what their success rate is, and I need to understand what their reward to risk ratio is. Okay, so if they say, oh, I've got no idea, then how do they know what to improve on? They may have an amazing success rate, but terrible reward to risk. Or they might have a half decent reward to risk, but the success rate's too low. All right, so if you've got, say, a 50-50 success rate, but you're only going for, let's say, 1-to-1s, but then you close out a few trades early sometimes, you'd probably be somewhere around here, which is unprofitable. Because this line here, let's do it in a different color, this is the break-even line. If you're in this area, you're a losing trader, which is where most amateurs are. If you're here, you're a profitable trader, which is where I am and other institutional traders are as well. Now, to get from the unprofitable stage, the unprofitable section, into the profitable stage, you need to know your numbers, and you need to know what goes into making those numbers. So my personal success rate's just under 50%. It's around a 48% success rate. And when I trade daily charts, my reward to risk is 2-to-1. When I trade smaller time frames, when I trade 1-minute charts for income, then my reward to risk ratio is 3-to-1. So if we split the difference there, this is where I fit into the scale of profitability. All right. Now, nobody's got a 100% success rate at 3-to-1 reward to risk. That's in fantasy land. All right. So no one's at the absolute top end up here. But profitable traders will usually be in these areas here. And the highest concentration of profitable traders will basically be really in that area there, maybe a bit further. But this is where most profitable traders sit. No one really sits all the way up here. Okay, it's kind of dreamland 3-to-1 reward to risk. So I sit just under 50% success rate, and my reward to risk being somewhere between 2 and 3-to-1. I'm kind of in that kind of a stage just here. Gives you an idea as to where I sit on the scale. And my winning trades are a decent size. They're not 20-to-1s, but they're 2-to-1, 3-to-1. They're consistent. I have winning trades every single day. I have losing trades every single day. All right, so you don't always win every single trade. I wish I did. Now, to kind of give you some results behind that so you can see for yourself, and also use some of those ringed lows that we talked about earlier, this is a trade on the NASDAQ 1-minute chart. It was $617 of profit, and you can see here the high point, the lower high point. You can also just make out the lower low. So I entered into the trade. You can see the blue arrow where I got triggered into my trade. My stop loss was just tucked underneath down here. And you can see this is a 1-minute chart. So 1, 2, 3, 4, 5, 6, 7, 8 minutes later, I hit target, $600 in 8 minutes. Not bad, right? Another example for you, also on the NASDAQ. This is, again, 1-minute chart trade. This is just shy of $1,000 in similar kind of time frame. So lower high, lower low. You can just make out my stop loss. You can just make out my entry level. And you can see where I exited the trade there. And that worked out to be $985 in what? 1, 2, 3, 4, 5, 6, less than 7 minutes. Another example, jumping into currencies. This is the pound dollar on a 1-minute chart as well. $500 in 1, 2, 3, 4, 5 minutes. It's got a nice ring to it, hasn't it? So lower high, lower low, entry level. You can see where I got into the trade. You can see my stop loss. You can see where I got out of the trade. Kind of sat there for 2 or 3 candles and suddenly jumped up in the right direction, and 2 candles later hit target. Now, I show you this not just to build your belief, not just to show you that you can actually do this, but also show you because every single one of those trade examples that I just showed you was a ringed low that I taught you earlier on. Okay, so it's not just something that I've thrown together for a free training. I actually use this stuff and it works. All right, and you can see very clean price action on the chart, couple of moving averages, that's it. All right, so let's just do some simple maths to kind of make this really make sense. So $100 of risk per trade, and let's talk 3-to-1 reward to risk because that's what I day trade with. So 3-to-1 reward to risk means that for every $100 that I lose on a losing trade, I have $300 winners. All right, so I'm targeting 3 times my risk. Let's go with a 40% success rate. So let's just go lower down the scale. Let's talk about 10 trades a day. So that's not loads for a day trader. That's quite a small number of trades. Some days I can have 15 to 20. But I would probably kind of sit somewhere around 12 trades normally. So again, I've gone slightly underneath that. We're not talking about being sat down for 16 hours a day glued to the screen here. We're talking like 30 to 60 minutes in the morning. So yeah, pretty short term, quick in and out, make your money stuff. Now, running through that with the maths, you can see with a 40% success rate, that's going to be 6 losses and 4 wins. And the 6 losses lose $100 each. So minus $100 times by 6 is 6 losses of $600 in total. And 4 wins that are each worth $300, $300 times 4, $1,200 worth of gains. Now you haven't made $1,200 because you've also lost $600, but you've still made $600 in the morning, which I'm guessing is more than you're doing right now. And even if you're half that, and say $300, I'm pretty sure that's probably more than you're making right now as well. All right, now, in the rest of the videos going forwards, I'm going to go through and explain more about my price action approach. I'm going to go through and explain to you more about how I identify trend, and I'm also going to go through and explain why amateur traders lose money, what equipment you need to trade with successfully, and really I'm going to give you the foundation of what you need to become a profitable trader. Okay. Now, if you're ready to just jump in 110% and you are ready to make money with this, you can take your trading to another level and start making serious money now. Underneath this video, you're going to see like an orange red button. All right, and on that button, you can click that and you can go through and take a look at my Ultimate Trader program. Now, before you get all scared, oh my God, it's a $5 program, it's nothing silly like that. I don't want your life savings. I want you to put money into a trading account. Okay, I'm not after taking 5-10 grand off you, okay? But with regards to the Ultimate Trader program, it contains everything you need to become a consistently profitable trader in the next 90 days. Now, considering that 90% of traders lose 90% of their money in 90 days, that's quite a bold claim to switch it around and go, okay, I can get you profitable in 90 days. But that's exactly what I do with 72% of my members. All right, so go ahead now, click the button underneath this video, go take a look, no pressure, but you'll see for yourself exactly what's involved, how good the quality of the training is, and you'll also get time with me to actually help you become a consistently profitable trader. Go take a look now, enough from me talking to you, click the red, orange button underneath here, and go take a look at my Ultimate Trader program. I look forward to seeing you in the members area, otherwise I'll see you in future videos.